So investors grappling with the possibility of an earnings recession.
We have a negative earnings momentum.
Slower earnings growth may be negative.
Negative global earnings growth.
I would really not be surprised if we had an earnings recession.
Earnings recession.
An earnings recession.
A little bit of an earnings recession.
You're already seeing these signs coming through.
There are many people who are saying this.
No question that the momentum of earnings has fallen dramatically.
That doesn't mean we're going to see a recession in the U.S.
You could actually see a no U.S. recession, but earnings recession, right?
If we do get one, I'm not sure what that really means for the market.
It's important because it just caps how much upside there is.
I think that's where the market is trying to figure out.
Joining me around the table here in New York City, Greg Staples, DWS Investment Management Fixed Income Co-Head. Megan Greene joins us, Manulife Asset Management Chief Economist. And Gina Martin-Adams. It has been a while. Thank you for coming back. Bloomberg Intelligence Chief Equity Strategist. Gina, let's begin with you.
Yep.
The economy is looking at a weaker relative to the immense strength we had 12 months ago. There is a real concern that earnings go into recession here in the United States. What does that mean for you and what's your base case?
So we do think that you will go into a technical earnings recession, which, you know, this is really a fuzzy definition. But let's say that an earnings recession is just at least 1 or 2 quarters of negative year-on-year growth. That will define earnings recession. Now, what does that mean for the market? Well, actually, the vast majority of time, the index, when it falls into a trough and starts to recover, those are great years for stocks. So a lot of this will depend, a lot of the outlook for stocks will depend on if this earnings recession becomes pervasive and leads to a much bigger decline into 2020, or if it's merely a short-term recession that improves as you go into 2020. Our forecast is ultimately you will see earnings growth improve into 2020, so we're in the experience of an earnings trough right now, which explains why stock prices are doing so well. Stock prices don't fall 20% without pricing in some sort of earnings weakness.
Yep.
So what we did last year was priced in a period of earnings weakness in 2019. Now the question is it just a short-term period, or do we see a bigger recovery into 2020?
Megan, how do you frame things at the moment?
Well, in terms of the macroeconomy, I think that revenues are much more important than earnings. So I would agree that an earnings recession doesn't necessarily mean an actual economic recession.
Yep.
But I would also say, there's a degree to which earnings can be fudged a little bit. So maybe analysts are kitchen sinking it, knowing that earnings growth was going to slow down this year. They're putting all the bad news in the first quarter so they can show a recovery. Firms can show a recovery over the rest of the year.
Yep.
But equally, earnings tend to be revised down over the course of the year. So the fact that they're so low right now suggests that maybe we might get to a recession by the end of the year.
Greg?
If we define an earnings recession as quarter over quarter, I think first quarter will be down from fourth quarter 2018. But year over year, calendar year 2019 versus 18, we still think we're up probably 3 or 4%. Wild cards would be oil, get oil down into the 40s, or the U.S. dollar strengthens considerably.
Yeah.
That could change things.